Buying your first home is an exciting milestone, but the mortgage process can feel overwhelming. For first-time homebuyers, understanding the steps from pre-approval to closing is key to a smooth experience. This guide will walk you through the essential stages of securing your first mortgage, helping you navigate the journey with confidence. Understanding your financial health. Before diving into the mortgage process, assess your financial health. Start by checking your credit score, as it plays a crucial role in determining your eligibility and interest rates. A higher score can save you thousands over the life of your loan. Obtain your credit report from Experian, Equifax, and TransUnion, and address any errors or discrepancies. Next, evaluate your budget. Consider your monthly income, existing debts, and living expenses. Use online mortgage calculators to estimate how much you can afford to borrow and what your monthly payments might look like. This step ensures you set realistic expectations and avoid financial strain. Getting pre-approved. Once you've assessed your finances, the next step is getting pre-approved. Gather necessary documents such as recent pay stubs, W-2 forms, tax returns, bank statements, proof of additional income, employment verification, and identification. These help lenders evaluate your financial stability. Research and compare lenders to find one with favorable terms and rates. Submit your pre-approval application, and the lender will review your documents and run a credit check. If pre-approved, you'll receive a letter stating how much you're eligible to borrow. This not only clarifies your budget, but also makes you a more attractive buyer to sellers. House hunting. With pre-approval in hand, start house hunting. Define your criteria by listing must-haves and nice-to-haves, such as location, size, number of bedrooms, school districts, and proximity to work and amenities. A knowledgeable real estate agent can guide you through the process, helping you find properties that match your needs and providing insights into market conditions. Making an offer. When you find a home you love, work with your agent to determine a competitive offer price. Consider the asking price, recent sale prices of comparable homes, and any necessary repairs or upgrades. Your agent will help you prepare a formal offer letter, which includes the offer price, contingencies, like a home inspection or financing, and a proposed closing date. Finalizing your mortgage. Once your offer is accepted, finalize your mortgage. Choose the right type of mortgage for your needs. Fixed-rate mortgages offer consistent interest rates and payments, while adjustable-rate mortgages, ARMs, start with lower rates that can fluctuate over time. Government-backed loans like FHA loans for lower credit scores and VA loans for veterans and active military members are also worth exploring. Lock in your interest rate to protect against market fluctuations. Rate locks typically last 30, 45, or 60 days. Submit a full mortgage application, including all pre-approval documents. The lender will then begin underwriting, verifying your financial information and assessing risk. Home inspection and appraisal. Before closing, schedule a home inspection to identify any potential issues with the property. A licensed inspector will examine the home's structure, systems, and overall condition. If significant problems are found, you may need to renegotiate with the seller or reconsider your purchase. Your lender will also require an appraisal to determine the home's market value. This ensures the loan amount aligns with the property's worth. If the appraisal comes in lower than the purchase price, you may need to negotiate or increase your down payment. Closing the deal. As you near the finish line, review the closing disclosure provided by your lender. This document outlines the final loan terms, monthly payments, and closing costs. Ensure everything is accurate. A day or two before closing, perform a final walkthrough to confirm the property's condition and that any negotiated repairs are complete. At the closing meeting, you'll sign all necessary paperwork to finalize your mortgage and transfer ownership. Attendees typically include you, the seller, both agents, a title company representative, and sometimes your lender. Be prepared to pay closing costs, which range from 2% to 5% of the loan amount and cover fees like loan origination, appraisal, and title search. Securing your first mortgage and buying a home is a significant achievement that requires careful planning. By following this guide, you'll be well equipped to navigate the process with confidence. Stay informed, ask questions, and work with trusted professionals to make your home buying journey a success. Happy house hunting!